Hey, here's another subscribers only video, right? So, one of the things that myself and Paul have been talking about these last couple of days is potentially changing what we do and I guess kind of what we offer to, new members and so on. And the general idea is maybe creating more of the club kind of feel. We're trying to get people to interact. We want obviously the same as what we've done with the prop firm channel, that people interact, and that's kind of where the value is in terms of the lessons. If we're not getting feedback, it's difficult for us to know what else to give, where else to go, where else to take it. So, from our point of view, it's not selling affiliate links. It's not trying to kind of plug and push the membership as a whole. We're going to stop doing so many of the visitor type videos and just kind of focus more in on getting people past these prop challenges, getting people, kind of active in terms of proper financing and funding. And obviously, I've set up the syndicate group, so there's a few things I want to go through with that as well. So, and it's just these things that are kind of happening in the background. If obviously you didn't see my post a couple of weeks back, I've got another book being published in October. So, look, it's not about advertising for us. Clearly, this is, for us, it's a pleasure in terms of seeing people's feedback with, having big payouts and this, that, and the other. So, I think what we're going to try to do is we'll have a trial period where we put some kind of membership, and it's kind of a one price, one entry rather than a monthly subscription or an annual subscription, lifetime pass, and so on. And therefore, for you guys already involved, no difference. But obviously, for newer people, that's what we're aiming to do. So, if you see some changes, you see some things that don't stress about it. It's from our point of view, we just want to kind of educate you guys and kind of keep plugging this. So, look, in terms of much, I suppose, much bigger picture, education is key, right? Now, I've put a couple of subscribers only videos together in the last couple of weeks, and it just comes back to joining all the dots. So, if you go through a lot of the content, and again, if you're newer, to us, then I suggest you really start at this point. I think you've got to go through these beginning courses, the advanced modules, and then obviously into the interesting lessons and example situations, right? So I think I'd leave these two until last. Definitely go through these. It'll make a little bit more sense, bigger picture. So when I look at any kind of chart, any kind of setup, right, there's a couple of things depending on the time frame and what I'm expecting out of a trade. Right now, I don't need to be in a trade all of the time. And I think this is the first misconception for a lot of people. It's, I need to be trading today. I need to be in a trade right now. I need to have 15 trades open, or I don't make any money. The opposite is kind of more true, right? And especially when you start adding bigger levels of finance, or you start going through these prop challenges and you actually start getting financed. If you're trading with $100,000 account or 200,000, $300,000 account, you don't need 10 trades. You need one or two decent trades, whether that's a week, whether that's a month, and you build on it, right? So when I look bigger picture, and I keep saying bigger picture because bigger picture is really, really important. When I look out, when I zoom out, right now, Bitcoin, great textbook example. Right? I think this is the best way to see it. Now, if you were looking at something like Bitcoin, right, the first thing that I do, right, is I'm looking for an overall bias, right? So if I can draw my levels on and say, potential one, potential two, right? This year is obviously still the question for me in terms of the accumulation on it, right? However, it's kind of besides the point. Because if you were interested in buying this, your buy-in levels would have been, down low anyway, right? Paul talked about buying, 20K. I know he sold at, I think it was 40K. I think in the grand scheme of things, right, I was just lucky I got in, over there. So none of this was interesting to me whatsoever. Zilch, right? Now, if you look at not what Bitcoin represents in terms of, buying or selling in terms of an opportunity, but how you'd analyze this, right? Part of this, like I said, why it's a textbook example, is that if you're looking at the types of moves, you want basically an overall bias, right? So as we come into this zone here, right, if you'd missed buying down low and you wanted an opportunity to go long, you'd be looking for the breaks of levels, right? And it's simple as that. When you look at analyzing Aussie dollar, euro, DXY, Nvidia, Facebook, whatever instrument really you're kind of fascinated by, right? What I'm suggesting, and where I guess these lessons kind of come from, right, in terms of taking your trading to a professional level, is less is more in every scenario, right? I don't care if this is an A, a B, a C. I don't care if this is only the A and this potentially is the B, right? What I'm trying to do is I'm trying to find an assessment that works for me, right? Not for anybody else. If somebody else wants to go and buy this at this price, be my guest. If somebody else wants to sell it now, be my guest, right? The real value is knowing where we are bigger picture, right? So, like I just said, we're putting these things together, right? Whether this is a one, this is a two, whether this is an A, right? Whether this is a B, all of these scenarios basically show this isn't likely to pop up to $1 million, right? So if I was looking shorter term, my first bias is to look for shorting opportunities rather than long opportunities, right? And again, I'm not saying go and sell Bitcoin. I'm saying the general idea is you want to find that bias. So the point then is once you've got that first bias, you can start to add to the bias, right? So again, I talked about less is more, right? And this particular indicator, I've been putting this together. This isn't going public, right? This isn't out for anyone. This isn't going to be for anyone to use. This is for me to demonstrate, to show, right? Because what I really want you guys to do is I want you guys to know this without needing the indicator, right? If you can't do that, you're never going to get this, right? You're never going to understand, how you make money consistently in the market because you're too dependent on indicators that are all lagging, right? If you look at the types of information that I've put into this, right, you've got clearly there a swing, right? So we've taken a swing, and this particular swing, where is not clicking? This particular swing there to there, right? That's the swing high. We've come up and we've grabbed liquidity. Keep talking about character, we keep talking about liquidity, right? Now, if you were to take a couple of steps back into this move, what we've actually seen is an ugly rally up, right? So that doesn't look impulsive. This doesn't look impulsive. It doesn't get impulsive until there, right? There's your first break of impulsive nature. So even if we add, let's just assume that this is a 1, we've got an A, a B, and a C sitting in there, and we can say this is a 2. Right? We can then go 3 extension, we can come down 4, right? And we can then put fibs to 5. Right? So even if this is absolutely massively bullish, right, then obviously we're still coming back down. So my bias is kind of reaffirmed, right? My look from that bigger picture down, top down, is I'm still looking at almost negative movement, right? So in one way, shape, or form, I can add to this as much as I want. I can say, oh, let's run some fib extensions. Let's go and put this as a 0, put this as the 1, this back down as a 2. Oh, look, it's perfectly hit the 2618. This must be bullish. And even if this is bullish, we're now in for the start of a bearish move. So all I'm doing is kind of adding confluence to my prediction, right? To my assessment. And I say prediction in kind of a light term because you're not trying to predict where this is going. You're trying to predict where you assume it's going to then react to how it moves. And this is where the prediction to the confirmation is really key, right? So once we've got a bias, now my logic is saying, well, we're at kind of a key level. We've hit the 2618. We've swept. We've kind of gone up and we've grabbed some liquidity to the upside. We've left some gaps to the downside. All of these things are all the way that I assess any setup, right? Anything that I'm looking at. I'm just getting rid of some of these. Now, the reason that I've picked Bitcoin here is that one, most of you guys are here for Bitcoin, and two, it's such a perfect textbook example. It's just easy to kind of show something that you can kind of do in your sleep, right? It's you know, it's there any which way, any shape or form. It's got all the kind of the characteristics of it's conforming, right? Now, if I was to look at something like euro, all right, Aussie dollar, I know a lot of you guys are now following Aussie dollar, right? Aussie dollar for me is a pretty, pretty respectable pair overall. Now, I'm not looking at this and saying, oh, I'm going to buy and I'm off to the races, I'm off long. As I've got there to my right, I can see this move goes up as DXY goes down. Now, if I was expecting a 2 to 3 move, which is part of a larger 2 to 3 move, I would expect DXY to already be exhausted. Right? I would expect DXY to already be kind of struggling. Right? Now, putting all these factors together, the point for me is bigger trade, bigger picture. We're not ready for this colossal move yet because I don't see DXY have hit where I think DXY is likely to go. Right? So all I'm doing is I'm adding kind of confluence to this, which means when I step down, this first low, right, we've come back down. We've got, again, character for 1, character for potential 2, right? We now have this nested move, whereas I don't think the 1, 2 inside the nested move has actually happened yet. Now, you might look at this in percentage terms and say to yourself, oh, well, DXY goes to 118, this is going to fall through the floor. There's a decoupling process that happens, right? You look at this in COT data, you look at what actually happens. It'll kind of ebb and flow, right? And the money will kind of transfer hands from A to B, or, retail to the wholesale type players and vice versa. And what will actually happen is the change of hands will kind of create this narrowing effect, right? Which is what basically creates the accumulation or distribution, what actually happens in these kind of range bound moves. So I'm expecting more of this to tighten up, right? In the meantime, I'm not interested in any kind of big trade in terms of, 500 pips, 1,000 pips. It's just not interesting for me just yet, right? So right now, I'm looking at this kind of smaller time frame again. Now, the reason that I switch from Aussie into Euro is that they act pretty comparable to each other in the general sense. But they both have the respect with DXY, the relationship with DXY. And the general idea is that a long time ago, the Euro had a much smaller pip rate in terms of the spread. And ultimately, it was just easier if you're looking for a 1 or a 2 pip move or a 3 or a 4 pip move, that you weren't counting 4 pips in to the spread. When you're $500 a pip or more, a 4 pip spread is pretty aggressive against you to start with, right? So, anything that makes your job a little bit easier, right? I'm going to turn this off. Now, when I look at these, let me just hide these a second, right? When I look at these smaller moves, my bias right now is that we're pretty much range bound, right? And this goes again the same thing. DXY hasn't done its thing. Aussie dollar hasn't done its thing. Drag that to the top, right? And therefore, in my view, right, I'm seeing a couple of things. We're range bound, which can easily be seen, right? I don't need an indicator to tell me that that's pretty much where we're at right now, right? We've got a couple of interesting things. We've got things like this gap down low, right, which might mean that we need to come down a little bit lower, same as I just said with Aussie dollar, right? So this is the first area of interest for me. We've got a couple of green candles ascending, which again kind of adds to my bias. So as you can see, right, I'm not trying to overcomplicate what I'm looking at. I'm not thinking, oh, this is an X and this is a Y and or this is this and this is that. I don't care. I really don't. Right? And the reason I don't care is what I'm looking for is now on that smaller time frame. Right? I've got bias as to why I think this will go down. I then come into a daily time frame. Right? And then it's on a daily time frame. Again, I can probably run some fib extensions and so on. But the first thing I'm going to look at is over to the left. We've got this move there. So there's obviously one part of the liquidity, and we've got this move there. Right? We can then come in and add things like the last buy before you sell, which is sitting there. Right? Then obviously we've got another one sitting there. right? And these types of moves are all areas of interest, right? So if we were to grind up a little bit, we're going to attract a lot more buyers in the grand scheme of things, right? If I come in here and go IG sentiment, let's have a look, IG sentiment report, something like this, right? I can quickly come in and see where we are right now. So we have pretty much still a short bias, right, on Euro USD. Again, this isn't perfect because this is one platform, but it's a pretty good sample size, bigger picture, right? So just like the COT, pretty good sample size. Now, we've got an ascending move that I've already identified, and we're ascending into the first level. We might ascend into the next level. At this particular point, it becomes almost silly, but you've got to understand if the sentiment is short, expect a little bit further to the long, right? And expect a little bit more emphasis to the long side. Okay. Now, if I drop down a smaller time frame, I'm looking for similar kind of moves, right? And what we have is this uptrend doesn't look very impulsive. It's kind of very, very ugly, but it is coming into my zone, right? I don't like this zone. I kind of thought this might have happened down lower, right? I really don't like this move up. This is just kind of confirmation that we're not ready yet in any which way, right? Now, with an ascending move, what I would anticipate is a move into this zone, right? A slight change of character as you see something like this, right? See that drop, the rise, then ultimately back down, taking that drop there, but actually not taking out the prior highs. At this stage, right, we can drop down, this is a 4 hour, drop down to an hourly time frame. I'll be looking for a short because my short would actually confirm this as a right area, right place, right time. I'm trading a confirmation and not assuming, let's go short now. But I also know, bigger picture, I want to be long this move in the grand scheme of things. But right now, DXY isn't giving me any reason, any rationale to take this long. Right? So when I'm breaking these moves down, I can now start to assess these things on this kind of time frame and say to myself, well, I'm hitting this zone. Where would my target area be? Well, just like having the Mayfair 1 indicator on, you can have a couple of key levels down. You can have obviously these levels of support, right? These are going to be key areas, in there somewhere. I'll just put this back on here. Right? These are going to be key areas in any which way, shape or form. Right? You're then going to have, obviously, why is that not going on? Oops. Let's go back one and put this on again. I apologize in advance in case this doesn't click. There we go. Then we're going to look at things like gaps, right? So there's a gap obviously just being filled there. There's a gap there that hasn't been filled, a gap slightly higher. That one potentially still hasn't been filled. There's possibly one, sneakily hidden in there. That one's already been filled. So at this particular point, I'd expect to move down, even into this range to sweep, this area there, right? As a bare minimum. So again, what you might see is that we go up, we come down, we come back and retest the underside, and then we drop down further. That wouldn't be a surprise at all. But I'm not trying to predict that. What I'm looking for is a good type of confirmation from this type of range to give me a trade that in essence can look something like this. So I'd be looking for, let's just say we come up to this level, I'd be looking for a trade that I could take, even if I said something like this as an ugly trade, right? So give me a 3.8 risk reward ratio. If I was to hide above, this is a stop loss. Right? And then ultimately the same thing, as we start coming down lower, you can start to use this to re-enter again. You can obviously then take the stop loss underneath this level or just over that level, bring this one back down. You got another 5% sitting in there. So look, in the grand scheme of things, right, it's less is more, really, right? And what I really wanted to do is to go back through the lessons, the education, so that these things make a lot of sense, right? You don't need this indicator to be able to say, oh, key level, area there with volume, key level, sweep level, liquidity box, key level, look, all of these things are already mapped out on the chart in terms of what prices do. Right? I've shown how to spot volume without needing volume. Right? Now, I'm not saying you need to turn volume off, right? And that's, I've been doing this for an awful long time. I'm saying I'd rather you know almost why it's created rather than being dependent on that indicator to show you where it is. Right? And the reason for that is it becomes an awful lot more obvious the more you see it, right? So when you look at a chart, I can scan through a couple of charts and I can say, oh, let's pick something out, let's just look at something like GBP, JPY, right? This is something I used to trade an awful lot of, right? You know full well that when you put, let's go bigger picture, when you put your chart on, you're going to see from a swing that a lot of the move was down low. Right? You're going to see this move here, right? Again, you're going to have a little bit of interest in volume sitting in there. You're definitely going to have interest in volume there. You probably have it quite thin as we then go up, right? So if you were to obviously look at this as a profile, you'd expect this to be, like I said earlier in the visitor section, you'd expect this to be some kind of B profile overall because the volume is pretty thin as we get up high, right? So if you were to go swing low, swing high, that's the kind of profile you're looking for, right? Now, the reason I'm saying play with these things, test these things, you work on these things for yourself, right? You get an understanding as to what volume's telling you, right? This is going to be so much easier to scan through these charts. Then you can start adding things like the daily bias, the quick bias. You start adding obviously your confluence, and this is where the clustering techniques come in, right? So again, go through the education and spend the time to really understand what it is you're looking for and why. Right? Don't be dependent on the indicators. One, because they're lagging, and two, honestly, it will make you a better trader for knowing why they happen, why they paint what they paint, rather than going, oh, the indicator says this, right? Honestly, it will make it so much easier for you in the long run. So again, sorry for my kind of blabbering on, right? This one's a slightly different video overall. I just wanted to show you a couple of different things, a couple of different ways that personally how I'm looking at the chart. So when I put, a post together or I put a video together, the reason that I'm sometimes vague is not because I'm vague in trying to hide something or trying to get you guys to kind of ask the right question. I'm vague because how I look at the chart is pretty vague, right? I'm not looking at, is this type of swing, is this type of corrective, or what about this at this type of level? Is this going to be a UTAD if we tag this point and this point? You know, the idea of knowing that they exist and the idea of knowing that they're there is one thing. The idea of trying to guess where you're going, trying to predict where you're going based on those types of techniques, right? It's not worthwhile, right? All you need to do is know that they're there. If you understand the logic as to what forms a UTAD or why that UTAD is actually only a liquidity sweep, right? It's going to make your job so much easier. So anyway, I hope you enjoyed this one. Thanks for watching, guys. Any questions, as per usual, stick them in, obviously, the technical question section, and I'll get back to you. Again, thanks, guys.